This Loan Plus 3 loan management software training is to help determine the type of paperwork that the loan applicant should provide and is determined by the policy of the company using LP3. LP3 is used to enter data from the customer into the application to capture all relevant information required by the company to assess and decide on loan approval. The software ensures that the necessary information is accurately recorded and organized to facilitate the loan decision process. LP3 does not collect paperwork, but information from collected paperwork can be entered into the new customer application for loan approval or denial evaluation. Requesting paperwork from loan applicant. Contact the customer via their preferred communication method, phone, email, etc. Determine the specific documents required for the loan application, like proof of income, identity verification, employment verification. Ensure these requirements are clearly communicated to the customer. Clearly explain the types of documents needed and the reasons for their requirement. Guiding customer on document submission. Provide instructions for how to submit documents securely, either digitally or via physical copies if necessary. Offer assistance with document scanning or uploading if required. Receiving and reviewing paperwork. Collect the documents from the customer through the chosen submission method. Carefully review each document for completeness and authenticity. Uploading and recording in LP3. Scan and upload the paperwork into the customer's file in LP3. Ensure all documents are correctly labeled and stored for easy retrieval. Verification of information. Cross-check the information provided in the paperwork against the loan application details. Flag any discrepancies for follow-up. Customer communication. Notify the customer upon successful receipt and verification of documents. Inform the customer if additional information or clarification is needed. Compliance and record keeping. Ensure all collected paperwork complies with lending regulations and company policies. Maintain a secure and organized record of all documents within LP3 and your secured filing system. Training. Ensure staff are trained on the company's policies for collecting and verifying information needed to approve loans. Staff should be proficient in recognizing what documentation is required to assess a borrower's financial status and how to handle incomplete or unverifiable information. The following are key factors that staff should be aware of when evaluating borrowers, along with recommendations for mitigating potential issues. Areas to evaluate and improve in borrower assessment, debt-to-income ratio, excessive obligations. Evaluate whether the borrower's total obligations are manageable in relation to their income. Consider flexible criteria for applicants with low obligations but high variable income. Income verification. Provide clear guidelines on acceptable income documentation, pay stubs, tax returns, bank statements, and alternative means to verify income, especially for gig or freelance workers. Length and stability of residence. Consider whether a borrower's residence history reflects stability. Offer alternatives to verify stability for applicants with a shorter residence history, such as confirming employment or banking history. Temporary versus permanent residence. For applicants with temporary residency, ensure clear policies regarding how this affects the loan decision and assess alternative forms of security or guarantees. Credit history, no insufficient credit file. For applicants with little or no credit history, offer options like using alternative credit data, e.g. rental or utility payments, to assess creditworthiness. Credit performance and delinquency. Provide clear criteria on how past delinquencies or poor credit performance affect approval. Consider more lenient policies if the borrower has a history of recent improvements or if delinquencies were minor or due to exceptional circumstances. Credit application completeness. Implement a follow-up process to help applicants complete missing information and clarify application details to reduce the likelihood of rejection due to incomplete applications. Garnishments, attachments, foreclosures, repossessions, collections, judgments. Assess how recent and significant these actions are in relation to the borrower's current financial stability and develop guidelines for overcoming these issues if the borrower has demonstrated recovery. Bankruptcy established guidelines for evaluating applicants with a history of bankruptcy, considering the type of bankruptcy and how long ago it occurred. Offer paths for borrowers to demonstrate financial recovery. Collateral value and type. Provide clear criteria for the types of collateral that are acceptable and ensure staff are trained to assess collateral value accurately, including appraisal procedures. Credit terms and conditions. If the borrower is denied credit under requested terms, offer alternative terms, lower loan amounts to make the loan more feasible. Credit references. If insufficient or unacceptable credit references are provided, develop guidelines to use alternative sources like rental or utility payment histories. Staff should be trained to help borrowers identify and verify additional credit references. Employment, history and verification. Assess the length and stability of employment more flexibly, especially for applicants with non-traditional or freelance employment. Offer alternative means of verifying employment for applicants in temporary or irregular employment. Income sufficiency. When income is insufficient for the amount of credit requested, consider offering loans with lower amounts or terms that better match the applicant's financial capacity. This concludes the Collect Loan Application Paperwork training. Thanks for watching and see you in the next lesson.